Hi, Sean Woolley from Cloud9 Spain. Today, we're going to be talking all things mortgages with the wonderful Chris Kakoz from Mortgage Direct, who are one of, if not the biggest provider of mortgage services, I think, in Spain. So welcome along, Chris. Thanks for joining us. We're going to be talking about all sorts of things, really, where the market's at, what's happening, some of the products that are available, and also why people should look at a mortgage instead of using their hard-earned cash. So just to kick off, you guys, obviously you work with agents throughout Spain. You're the guy on the Costa del Sol for your sins, and you help to find mortgage products for prospective buyers here in Spain. Is that correct?
Exactly.
Okay.
Yeah.
So typically, what does that process involve?
So it starts off right off the bat with an initial inquiry. So clients reach out to us, tell us a little bit about their plans, when are they looking to buy, their profile. That's the most important, really, is the type of profile that's coming in. And then we assess that full situation, present the client to the banks, and get offers to finance.
So the question I'm sure people are asking at the other end of this camera is, why not do it myself? Why shouldn't I just walk into my high street branch of Sabadell or Cacamar and say, I want a mortgage? What makes coming to you a better option?
Sure. That's a very valid question. And for example, I'm Canadian, so my initial response, just go into your bank and you've got a relationship there and get the financing done there. In Spain, a lot of the clients are either abroad, they don't have a Spanish bank account already, they don't have a connection, they don't have many other times language. So there's that issue there. When the clients go to the banks, there's a process to apply. So there's an application form, submitting the documentation. And if there's any sort of obstacles faced with that bank and the client wishes to go to another bank, you're just repeating that process.
So that's a couple of hours of your life each time, really, isn't it?
Absolutely.
And the aggro.
Absolutely. And for us, that's a huge time saver for the client because we are packaging that client's case together, presenting it to multiple lenders. And in a perfect situation, we're getting multiple offers and letting banks compete amongst each other for the clients.
And I guess your position in the market as being a market leader helps with that, because you can, with your buying power, I suppose, you can say to the banks, hey, come on.
Yeah, we've worked with banks for almost 20 years now.
Right.
So the connections that we have with banks are a lot more lucrative and stronger than a client would have that just comes off the street and walks into a branch to try to get a mortgage. So their rates tend to be more favorable, reduction or zero cost on arrangement fees. These are the opening fees to get the mortgage going. So it ends up saving a client money and, of course, time, which I think in many cases can be a lot more important.
I think, interestingly, on the Costa del Sol, we're probably just out of the mass market kind of client. So, a lot of properties started around the 300,000 level and way up. Our average, I think this year is just under €1 million. So we're dealing with, I'm guessing, applicants who are not your typical been working in the same company for the last 20 years. They're probably entrepreneurial. They're probably business owners or high up in the corporate ladder. So I'm guessing with that come complications.
Absolutely.
With tax returns and various things. And I guess that's why it's even more important for an expert to package the applicant.
Exactly.
And also to know which bank is going to be sympathetic to that applicant's details. Because applicants, they come in all shapes and sizes, don't they, in terms of where they're from, the currency they're earning in, the age. So you'll look at it and go, okay, Sean Woolley, he's going to be a problem. I know a bank that might be able to help him, but I need to package it up sympathetically. Is that correct?
Yeah, exactly. Because when you go to a bank and they give you that form to fill out,
it's very formulaic, isn't it?
Exactly. It's black and white. Yeah. So you've got these boxes and fields to put your income, what's your net income, how long you've been in business for. But a lot of the times the cases, especially for the higher net worth individuals, a lot of them are, like you said, entrepreneurs, self-employed. They have subsidiaries, in different countries. They're very complex cases. And if we just simply take documents, attach them to the banks without explaining what's going on, banks will be completely lost. So our job really is to study the case, understand how they're earning their income, explain the expenses that they may be writing off, whether it's depreciation or if they're earning dividend income. We need to explain the fluctuation of total income in so many different ways. So for us, it's really important to storytell at the end of the day.
Yeah.
And the banks need to understand who the client is, how they're earning their income, and can they afford the mortgage that we're applying for.
Very good. And what are the hot products at the moment? Because it used to be, in my day, it used to be variable interest rates. Now it's very much, we're in a fixed rate market. Aren't we?
Absolutely, yeah.
And what can people expect?
Range for fixed right now is between 2 and 3%, more or less.
Okay.
And this is as of, for example, today. Fixed rate is a lot more of a popular option. There's about, I believe it's close to 70% of borrowers are choosing the fixed option, because in my opinion, it's a no-brainer. Like for the life of your mortgage, whether it's a 20-year term,
You can budget for the whole thing.
yeah, absolutely. You know what you're paying for.
Yeah.
There's no surprises in payments going up and down.
Yeah.
Being Canadian, we don't have 20-year, 30-year fixed mortgages. They're typically 5. So
Yeah.
every 5 years, we have to go back, renew, and it's a gamble because we don't
There's
know.
risk attached to that, isn't
Absolutely, right. Especially in the last 5 years, Canadians have seen a high increase in rates, close to 6%, and clients that were paying 2% and change. That's a big jump in their payment.
Yeah.
Their amortization now is stretched out, so it can be a bit unpredictable.
Wow. So to secure a fixed rate between 2 and 3% for 20 years is amazing, because that is still cheap money, isn't it?
For sure.
Because normally fixed rate, they kind of penalize you to hedge at their end, and you end up paying a lot more. But actually, that's fantastic.
Yeah, inflation is close to 2%, right? So
Exactly.
you're borrowing money at such low rates. Historically speaking, they're close to record lows.
Wow. So the 2% kind of rates, that does come with caveats, doesn't it? Because there are the banks that offer that low rate, they will want something in return. They'll want you to take out every product known to mankind.
Exactly. So yes, more or less. If you're going towards the bottom part of that, the lower part of that range, then you're typically signed up, or you're linked to multiple products with that mortgage.
Are they things like insurances, credit cards? You have to do certain things, don't you?
Other banks may just offer 2 or 3 products to discount that rate down to low 2%, and it could be like home insurance, life insurance in the bank account.
Yes.
That would be
the stuff that you would need anyway. Probably.
Absolutely, exactly. And then others are a bit more creative, where they'll offer 9 products, and you have to sign up for a credit card, use this much amount, deposit this much per month.
Yeah, which you forget about, and then the next year when your mortgage review comes around, you're like, hang on, why's my rate gone up?
Exactly.
But I guess as you get to the 3%, then that becomes a little more flexible, and you don't have to take these products.
Correct. Yeah, towards a higher range, it's the typical necessity products like the bank account and home insurance, for example.
So because money is, I'm saying so cheap, but it is. Historically, it is cheap. I'm guessing that means that people are not using their hard-earned cash to buy property anymore, that they can, even if they have it, and we get a lot of cash buyers, would your advice be, hang on a minute, let's look at the options, because you can be maybe generating more income by using your cash in a different way, and
oh yeah,
is that a conversation you often have?
Yes, I'm big on leveraging, so I'm an investor myself.
And leveraging, just for people who maybe not familiar with the term, what does that actually mean?
It's borrowing on an investment to generate a rate of return. So instead of using your hard-earned cash and to buy something, you can mitigate that risk without depleting your savings, for example, and borrow at a low interest rate and make a rate of return that can actually cushion.
So basically, if you're looking at a property for €1 million, rather than using your hard-earned €1 million, you could maybe use 500,000, and then you could have some fun with the other 500,000.
Absolutely.
At a higher interest rate.
Sure. Or just having it there. Whether it's for an emergency, that's an extra source of funds for repayment.
Or another property.
Or exactly. Absolutely.
What a lot of people
other
do.
Properties, renovations.
Because I'm guessing if people are looking at it from an investment angle, and they're generating a 6 or 7% rental return on their investment, but their finance is costing them 2.5. Wow.
Oh,
I think you call it an investment accelerator.
Yeah, it's okay. For me, it's a no-brainer. If we use the example, let's say $500,000 properties, you're earning a 6.5% rate of return. It's about $32,000 and change per year. Okay, 6.5%, not bad on your $500,000. Now, if you were to go the financing option and you borrow a 60% mortgage on that $500,000, you're investing 200,000.
Yeah.
And that rate of return on the cash jumps up to 15%.
Yeah.
That's more than
Which
double.
is amazing.
Absolutely.
Yeah.
You know, and then you get to keep that 300,000 and change to, like you said, whether it's another property, emergency, renos, put it in the stock market if you have the risk for it.
Yeah.
Because there's so many different asset classes that can generate a much higher rate of return than current interest rates.
Absolutely.
And I'm only talking about rates today. You know, we wouldn't be having this conversation if rates were at 20%.
Yeah.
Obviously, right? So, you know, I truly believe that we're in a situation that it's a very advantageous position we're in today in today's market, where we can utilize, like you said, free money, cheap money to borrow and take advantage and accelerate those profits.
And I guess I can tell the way you talk that you have an investment background. So these are conversations that you're happy to have on a daily basis. Because I always get the feeling with some advisors, not just in mortgages, but again, it becomes quite formulaic. You know, you can have this and you can't have that, but you seem to look at it on a sort of holistic approach and look at it from all angles.
In my background in Canada was as a financial advisor for one of the major Canadian banks. Okay. So I dealt with, you know, high net worth individuals. We did a lot of investment planning, credit planning, and then I moved into the mortgage specialist role. But these were conversations, you know, I had on a daily basis.
Yes, and this is a market you understand. And,
yes.
And tell me about the high net worth area, because that becomes a slightly different conversation, doesn't it, in terms of what those men and women need from an advisor. And you have a specialized department, don't you, that
Correct, exactly.
deals with that. What do you find the main things are there that people are looking for?
Complexity. You know, it's just that one word, to be honest.
Very often they've got a global footprint, haven't they?
For sure. Yeah, you know, like, you know, I was saying before, these clients have companies scattered across the world.
I wonder why.
Diversification.
Yeah, that's it.
They're just trying to maximize and grow, and these profiles are very unique. There's no two cases that are similar. These are not clients who are salaried usually or employed by a company. These are clients who are creators creating companies, and their background, their finances are extremely complex to look at just on paper. So for us, it's sitting down and actually understanding how the clients generate the income, where are their savings coming from, how are their existing companies incorporated, how is that structure, for us to understand at the maximum to explain to the banks.
Well, I was going to say you would understand it, but would a Spanish high street bank understand it, or would you need to go to a private bank or someone who's going to be as imaginative with their end of the deal?
Spanish banks are open to it.
Okay.
Yeah, there is an appetite for it. For of course, every bank's going to want a high net worth individual, but they also need to understand the client in and out. And I think that's where we come into play, because we are sitting down and putting together a dossier, a full package of the case, explaining all the details throughout the last 3 to 5 years of income tax returns, so the bank can really understand who are they lending to.
Yeah.
A lot of times on paper, a client may not look like they're very profitable.
Well, I'm going to say we get a lot of clients who are multimillionaires and they have multi-millions in assets, but in terms of what they earn, it can be like, how do you survive?
Yes, exactly.
And that's what the banks look at, isn't it?
Yeah.
You know, without the explanation, it's kind of like, hang on, this guy can't afford it. But I guess if you're going to the right lenders and you're explaining the case, then it becomes a different ballgame, doesn't it?
For sure. And the connections we've had with the lenders. Like I said, Mortgage Direct with almost 20 years. We've got strong relationships where we pick up the phone, explain the case, will this work? And this is usually done before we even present the full case to the banks. And if they say, sure, send it over, we'll review it together. And that's typically how it would work.
And very often at that level, it's a bit of a quid pro quo, isn't it? Where the banks will want something from the client, some money on deposit, and then in return,
Well, you know, if there's risk, when I say risk, you know, in quotations, are like that then banks can ask for a pledge.
Yeah.
So if there's limited income that they're declaring, you know.
But there's money somewhere.
Exactly.
Yeah.
Exactly. Or they just had a year where they're billing all their clients for the following year for whatever reason. We've had situations where a client had to pledge a smaller amount, and that would be kind of like a promissory investment for them to invest with the bank. And then banks can be a bit more open to lend in those cases.
Fantastic. And in terms of the process, very straightforward, isn't it? I mean, you always say that it's always handy to get mortgage pre-approved
Yes.
before coming to Spain and even looking at houses, because then you know what your budget's going to be. You can then start stress testing mortgage conditions and rates and kind of know what you can afford and what you'll need to return at the other end. That's something you're happy to do?
That's what we have to do.
Yeah.
Get started like ASAP. Okay. You know, the process can be long in comparison to a lot of other countries. So get started literally as soon as you can, because to put together all that documentation, I've never seen a client do it in an hour. It takes a long time. Clients tend to request it from their accountants, their bookkeepers. There's credit reports. Some countries you have to wait a week more or less to get the the reports. So to put everything together, I think you have to factor in that time. And then, of course, to present that to the bank and wait for their response is also important.
Because there's two different things to this, aren't there? There's the pre-approval, which is where you can have a cursory look at the documentation and make an informed judgment on what you've been provided with, which isn't always the truth, but generally is. And then there's a second stage, which is when you say, right, okay, let's go for it. Let's present this to one or more banks to get an offer, a mortgage offer.
Correct. Yeah.
For the pre-approval, how long does that normally take? If you said to me, okay, Sean, you need to provide me with these documents, and I go home tonight and get all the documents and ship them to you on email overnight, how long would it normally take for you to come back to me and say, forget it?
To be conservative, again, I'm a bit more conservative naturally. I would say up to 2 weeks.
Okay.
Okay. There are times where we get answers in 24 hours, 48 hours.
Yeah.
But in most cases, we're going to be getting some response and back and forth if the banks need clarification within 2 weeks.
Do clients often ask you for your opinion? Say, look, I haven't got time to wait for the banks. Can you give me an idea? Do you think I'm going to be okay?
Well, to be honest, I wouldn't present it to a bank if I don't believe in the case myself.
Right, okay.
So I tend to explain that to clients very often. I wouldn't be wasting my own time and their time and the real estate agent's time, everybody's time, if I believe it's not going to work.
And in terms of different client profiles, demographics, are there any countries that you would look at and go, oh, forget that? Or because we were discussing upstairs, weren't we, about the like people earning in dirhams in the Middle East, and it used to be a little bit of a brain teaser for a lot of banks, but now there are banks that will lend.
Banks are opening up to a lot of different nationalities and currencies, whether it's a dirham, the zloty. We've seen majority of the banks now accept, where prior years ago that was a different environment for them. So we see nationalities changing, and that just really depends on the demand. I think banks are adapting to the different, herds of people that are migrating here, and to take advantage of the market here.
So if you're earning in your zlotys or your dirhams, you know where to come. That's good to know. So thank you so much for coming along. We're going to leave your contact details on this video, so people can contact you directly if they have any questions, or if they'd like to get the ball rolling with a mortgage application, or at least having a chat about getting a pre-approval. But yeah, it's an interesting line of work you're in, and I mean, I know from personal experience. I mean, I've lived here for 25 years, and I have decent relationships with my banks, but I used a mortgage broker because I'm self-employed, and it just became a little bit of a minefield.
Sure.
And I thought, I haven't got the time, the energy, or the experience to navigate this.
Yeah.
So if someone like me is using a broker, I think pretty much everyone should, really, particularly in a foreign country. So yeah, you offer a great service. Thank you so much for joining me today.
Thank you,
really
Sean.
appreciate it.
Appreciate it.
And until the next time, cheers for now.
Thank you. Cheers.